I'm happy to present an overview of PPGPL's performance for 2020, as well as our performance as at the end of Q1 of 2021. Over the years, shareholders, I have shared with you the vision and the strategy that has underpinned PPGPL's performance, certainly since we did our IPO back in 2016. And over the years, PPGPL has gone through various stages in its corporate life cycle, as you would see on the slide before you. Starting in 1991, when we first started up our business, in fact, on June 15th, 1991. And since then, the company has gone through various stages in its development, as would be depicted through the various stages of this life cycle that you would see on the screen in front of you. In 1997 to 2015, during the tremendous growth in the local energy sector, PPGPL would have expanded its operation during that period, which would have been followed by the period from 2016 to 2019, when the international energy markets would have consolidated and reset. And during that period as well, PPGPL also consolidated, reset our business, and developed a new strategic plan to take us through the period 2016 to 2019. But here we are now in July of 2021. And in this period, we are at a very exciting point in our corporate life cycle. We have just completed, just 2 weeks ago, 30 years of successful operations in Trinidad and Tobago. And in fact, in the last year, those operations have now extended into North America through our acquisition of the NGL assets of TTNGL Liquids Marketing, which we completed in February of 2020. So as we sit here today and as we look at this presentation, we are on the cusp of a new era for PPGPL, an era in which we have operations here in Trinidad and Tobago, we have operations in Houston, Texas, and we have operations in Calgary, Canada. And as we do that, we continue to pursue our growth mandate and our strategic intent to expand our business along the energy value chain in key local, regional, and now international markets. 2020 was 2020, a year that was dominated by everything that had to do with the word pandemic. COVID-19 came along in March of 2020 and literally turned the world upside down. But in the midst of all of that, we had some significant and major achievements as a business. First and foremost, our employees, all of our employees, came to work and returned home safely for all of 2020. We had 0 lost workday cases for both our employees as well as employees of contractors. So shareholders, that means that everyone who came to work at PPGPL were able to return home to their loved ones safely. That was as a result of all of our policies, procedures, and systems we put in place over the years. And in particular, what we would have upgraded in 2020 to take account of the impact posed by COVID-19. With all of this said, we were still able to do our work safely. And that work was recognized again by the Gas Processors Association in the United States, where in May of 2020, we would have been awarded first place in our division for our safety performance for that year. And I will say, shareholders, that in May of 2021, we were again placed first in our division for our safety performance. It is testimony to the commitment that the management and employees all put towards ensuring safe operations at our businesses and ensuring that our employees are kept safe. In addition to our safety performance, our growth agenda achieved a major milestone in 2020. In February of 2020, PPGPL became the first state enterprise or state-controlled entity to complete an acquisition of another entity in the United States. In February of 2020, we completed the acquisition of the NGL business of Trinidad, and that acquisition was completed in February 2020. With the acquisition, we would have acquired certain contractual assets, and those assets were formed into two subsidiaries, Phoenix Park Energy Marketing, which is a Houston resident company, as well as Phoenix Park Canada Energy Marketing, which is a company resident in Calgary, Canada. That business was successfully integrated into the PPGPL fold, where one of our major successes in that integration was the creation of a shared services model, whereby all of the human resources, finance, administration, public relations, business development, and general administration take place out of Point Lisas, Trinidad. So while those entities are operating in Houston and in Canada, there is a shared services model sitting here at PPGPL in Trinidad and Tobago, in Point Lisas, Trinidad, that is providing the support for this business. And, you know, as we were told by some of our forefathers, sometimes, you know, when you open a small door, huge opportunities arise. This acquisition has created a tremendous platform for us to pursue similar type of acquisitions, and I will discuss that a little later on in the presentation. With all of the challenges with COVID-19 and those challenges posed by COVID-19, PPGPL still generated a profit after tax in 2020. In fact, in 2020, our profit after tax generated was just about $17 million US, or just around 102 to 103 million TT dollars. While all of the challenges were taking place, we continue to soldier on. We continue to focus on our core business. We continue to do the things that were important to ensure a resilient business model. First and foremost of which is our safety performance, but complemented by ensuring high plant availability and reliability. Notwithstanding all of the challenges in 2020, our facility continued to operate at on-stream factors in excess of 98%. And that includes continuing to conduct all of the required maintenance on the facility during 2020. We would have also taken the opportunity as well, as employees began adjusting to what is now referred to as the new normal. We at PPGPL saw this as an opportunity to consider our people development within the context of understanding where the business was heading, particularly given our venturing now into the North American market. And in 2020, we continued the process of people development, where we allocated a certain portion of our training and development budget towards the upskilling and retooling of existing employees. An example of which is our administrative assistants. As we sit here today, in PPGPL, there are no longer any administrative assistants. We have undergone a significant upskilling and retooling and continue to do an upskilling and retooling of those employees to cater for the technology age that all businesses are entering into. Those admin assistants are now referred to as business analysts. And their main role is to conduct data analytics across the organization to ensure that in the use of modern technology, information flows to the key people in our organization to improve the quality of our decision making. That's just one example. But it's a very simple example in how companies and how we at PPGPL see our people and see the need to continuously reinvent ourselves and reinvent our skill sets to cater for the changes that are currently taking place, but more importantly, for the changes that we anticipate in the foreseeable future. Speaking of changes, you know, when I first started this conversation with you, we had one source of income at PPGPL, which was the income derived from our NGL marketing. Over the past 3 years, we have diversified our revenue sources into 4 different revenue bases. We continue to generate our revenues from NGL marketing, and that continues to be the main source of revenues and earnings for this business, which are the NGLs that are marketed out of Point Lisas. But since then, we have added in condensate processing, which I would have discussed with you before. We would have added in our product trading, and in fact, earlier this year, we had quite a significant success with a spot transaction, which we did, which just on the basis of that one transaction would have yielded the company close to $1 million in gross margin. One transaction. And as we continue to build that aspect of the business, we continue to seek out more and more opportunities in order to build our product trading portfolio. And of course, finally, with our acquisition, we've now added in the revenues that are being earned from our North American subsidiaries, which fall under the umbrella of Phoenix Park Energy Holdings. And those subsidiaries would have generated a positive return in 2020. And shareholders are so far in 2021, as at the end of Q1, they have already exceeded the performance that they would have delivered in 2020. So with these 4 sources of income, we have created the basis upon which we will continue to grow the business. We will continue to diversify the business and continue to ensure that the business remains more and more resilient so that it can withstand the shocks of the types that we've seen over the last 2 years with the crash in oil prices, as well as the impact of COVID-19. The PPGPL business, as I mentioned, has been in existence now for 30 years. We are a commodity business, and we are susceptible to the impact of particularly product price because we are not price setters. And as you will see from the charts in front of you, our revenues are heavily correlated with product price. If you look at the red line on this chart, this line shows the average price that we would have sold our products at over the last 5 to 6 years. And as you can see, as prices have gone up, so has revenues. And similarly, as revenues have gone up, it is heavily correlated with production. So we are very much subjected to some of the uncertainties that arise from being a commodity business. But the key to it is that we have been through these cycles so many times over the years. We have designed a business in order to be able to withstand these cycles. And notwithstanding the challenges of last year, as I would show you in a little while, we are coming out of the cycle that would have started late in middle of 2019 and into 2020. But we are susceptible to product price, and we are susceptible to production. And it is a natural part of the business. But what I want to stress to you, my fellow shareholders, is that this business is resilient. And even in the midst of a pandemic, we were still able to maintain our markets and deliver a decent level of profitability back to our shareholders. With that said, in 2020, we would have also spent a tremendous amount of effort managing our costs. And as I would have described to you shareholders over the years, the PPGPL business model is designed around a very stable cost structure. Whether prices are high and earnings are high, as shown in this chart, our operating costs tend to remain fairly stable. And this is due to, particularly over the last 5 to 6 years, where we spent a lot of time and a lot of effort ensuring that our cost structure could exist in the worst of times and in the best of times. We have done a lot of employee development over the years. So for example, our engineering department conducts most of our engineering for major capital projects all in-house. Over the years, a lot of those efforts were contracted to very expensive contractors. Those things are now being done in-house. All of our HR work is done in-house. All of our finance work is done in-house. So we are able to leverage on our internal capabilities, and in doing so, maintain a very stable cost structure that ensures that there's a level of predictability in terms of our cost management, and it gives us a very, very good and steady platform within which to build our business. And so as we came out of 2020, 2021 has seen a couple of things occurring. First of all, we've seen an improvement in the Mont Belvieu price. For most of 2020, the Mont Belvieu price, the average Mont Belvieu price, averaged between 50 to 60 cents a gallon. For 2021, during quarter one, and I will also say into quarter two as well, the Mont Belvieu price has started recovering to levels that we were accustomed to towards the middle of 2019. In quarter one of this year, we generated revenues of $67.8 million. But what is more important is that our profit after tax in just quarter one of 2021 has already exceeded the profit after tax that we would have earned in all of 2020. And this gets back to the point that I made earlier, where I mentioned that this is a commodity business. We will go through cycles. And 2020, for all of the reasons we know, was a year in which the cycle was on the downward trend. But now we are seeing an improvement as the cycle continues to shift back towards what we are usually accustomed to, where product prices are in the range of, for quarter one, around 98 cents a gallon on average. And that is getting us back to our earnings base that we have seen over the years. Our North American business, as you would see here as well, they generated gross revenues in quarter one of $59 million with a profit after tax of $1.5 million US. And shareholders, this $1.5 million is 2.5 times what this business would have generated in all of 2020. So again, it just reflects how the business is recovering, but also how some of the efforts that we've made in strengthening the business over the years is bearing fruit in that we were able to survive a period posed by the pandemic. And now coming out of it, we are able to see the benefits of it. In terms of our production, this has been another success as well. In 2020, because of the pandemic, we would have seen a few facilities on the Point Lisas industrial estate cease operations due to economic reasons. And in July to August of 2020, we actually saw inlets into our facility around 800 to 850 million cubic feet per day. As I stand before you now, our inlets into PPGPL at this point in time is around 1.2 billion cubic feet per day. So inlet gas over the last 6 to 8 months have increased by 50%, such that they have restored to the levels that we saw pre-pandemic. And with that, what we are experiencing, as shown in the blue sections of this chart in front of you, is an increase in our productions from gas processing. And this is the NGLs that we extract from the gas that NGC delivers to Point Lisas, by around 400 to 500 barrels per day. But it's not only the increase in inlet gas that has given rise to this increase. What we've also seen is a marked increase in the liquid content in that gas. 18 months ago, the liquid content in the gas was about 0.33 GPM. Today, it's at 0.41. And again, that is due in large measure to the work being done by the operations and commercial folks within the NGC that has resulted in the increase in the liquid content or the richness of the gas that is coming to PPGPL. Where we have seen a decline in production is the production that we receive from Atlantic LNG. And that is due primarily to the shutdown of Atlantic Train 1. That plant continues to be down. And as things stand right now, we are receiving NGLs from trains 2, 3, and 4. Even though Atlantic Train 1 is down, from a financial perspective, they still pay us our processing fees because our contract with Train 1 continues to remain active until next year. So we still remain financially indifferent. The only difference now is that our production is down due to the loss of those volumes. So particularly on the gas processing side, where the majority of our net income comes from, there's been some positive developments in terms of the inlet gas volume, as well as the liquid content in the gas. And shareholders, it is really, I can't remember the last time that as a business, we saw a concurrent increase in prices, a concurrent increase in inlet gas, and an increase in liquid content. All three factors, key factors to us, have increased all at the same time, while we keep our operating costs steady and stable. Our sales volume have increased since 2020, as you would see here, primarily driven by our North American business. In 2020, that business would have marketed around 11,400 barrels per day. In 2021, as we get closer to the end of the year, certainly in Q4, I expect those volumes to increase to around 17,600 barrels per day. However, the sales out of PPGPL will decline, again, due to the loss of the volumes from Atlantic Train 1. But having said that, it emphasizes the importance of diversifying our revenue bases to find new sources of income. Because as we've lost production on one end, we've picked up production and marketing volumes on another, in our North American business. So in 2020, we were just around 29,600 barrels per day. We expect to complete this year marketing volumes closer to 31,000 barrels per day. So as we move forward as an organization, we've come out of 2020, Q1 2021 has been more profitable for us on the basis of higher prices, higher production. And Q2, I would say, share with you that Q2 has followed a similar trend to Q1. So as we evolve as a business, we will continue to align our business model to ensure that, we derive new sources of revenue and EBITDA. We'll continue to expand our revenue streams, and we'll continue to push our business model by looking at investments within the region and internationally, such as those new investments start contributing a higher share of our total EBITDA. We have a 3-year target to get to 20% of total EBITDA from those new investments. And as you can see from the previous slides, certainly with the increase in marketing volumes, we are well on our way to getting to our target. We will support all of this by strengthening our business along the 4 strategic pillars of the NGC group. These are set out in front of you. We will continue to secure our existing business by focusing on safety, by focusing on cost, by working closely with the NGC to get the liquid content in the gas as high as possible, and to secure our markets. We will work within the confines of our work plans to continue to maximize the use of technology, certainly as a strategic enabler. We will continue to leverage on the Phoenix Park brand, which from a marketing perspective has built up a very strong brand in our regional markets over the past 30 years. We are regarded as a reliable supplier, and we are branded by our customers as having very, very good customer service. We want to get our product slate. We want to increase our product slate. I will discuss maybe in a subsequent meeting what we are doing in that regard. And as I mentioned, we will continue to work with our employees to make sure that our employees are skilled and tooled in order to cater for the the future that is before the energy sector here in Trinidad and Tobago. With that said, we will continue to aggressively pursue value-adding growth opportunities in the Caribbean, Latin America, and North America, with some additional focus in the next year on Guyana and Africa. And of course, always remembering that we are a Trinidad and Tobago resident company. We are state-controlled, and therefore our obligation and responsibility to the people of Trinidad and Tobago is going to remain at the forefront of our activities. Our corporate social responsibility is a strategic pillar. At the end of the day, while PPGPL is a corporate entity, we are part of the Trinidad and Tobago community, and it is our responsibility, and we will continue to fulfill our responsibility to give back to our community. And so as we look beyond 2021 and we start looking into 2022, we will continue to expand our operations. We are working on, and in fact, at an advanced stage of working on a few new investments to complement our North American business. And I expect that once those investments materialize during the course of 2021 and Q1 of 2022, by the middle of 2022, we should see our marketing volumes grow from 31,000 barrels per day to close to 47,000 to 48,000 barrels per day. That's a 52% increase year on year. And even what we achieved in 2021 is a 7% increase year on year. So, we continue to move in the right direction. And we, as I mentioned, this growth is supported by two key strategic investments, which we are currently working on. Both are at an advanced stage. And once within the regulations of the SEC, once we're in a position to disclose those investments, I will do so at the appropriate point in time. So, shareholders, ladies and gentlemen, I just want to conclude this presentation with a few messages. First of all, there's no need to panic. PPGPL is a resilient organization. In the 27 years I've worked at PPGPL, I've never seen a year as difficult as 2020. We went into 2020 on the heels of all of the issues within OPEC that caused crude oil and petroleum product prices to fall. We had our challenges in the local industry, and then along came COVID-19. But we survived. But not only did we survive and grew. We survived and invested. And we survived and expanded our footprint to diversify our revenues into an expanding sector in North America. Operationally, we've looked after our people. Our people are safe. And as at the end of Q2 of 2021, we continue with our proud safety culture of returning all of our employees safely to their homes at the end of the day. Just a little bit more tired, but they return home safely. Our marketing efforts continue to be robust. We have secured our lucrative Eastern Caribbean markets. In one instance, we've secured it on a 5-year contract, and that includes Guyana and Suriname. We continue to renew our contracts, and in the case of our North American business, they continue to expand their customer base. We have a stable cost structure, and that stable cost structure and our superior customer service is part of the Phoenix Park brand. We have a cost structure that is stable and that will maintain certain guiding principles of safe operations and asset integrity over the years to come. And as I had mentioned earlier, our results thus far in 2021 have already exceeded 2020. And that trend has continued into Q2 of 2021. So my expectation is that when the Q2 results are published, what you would see is a continuing trend of the recovery of the financial performance of the business, and a lot more positive messaging coming from that. With that, we would have declared to our shareholders and paid a dividend this past week. And so this would now be the second dividend that PPGPL would have paid to our shareholders. Prices and production continue to recover. Prices have remained stable since the early spike during quarter one. So quarter two, they have remained stable. And the expectation is that for this quarter, in quarter three, they will continue to remain stable. We've seen an increase in our natural gas processing volumes, an increase of 25% since quarter three, an increase of 50% since quarter two of last year. Currently, our processing volumes are around 1.2 billion cubic feet per day. And our sales volumes have increased with the advent of our North American operations. And we are going to use that business as an opportunity to continue to secure more and more product to place in our markets, not just here in the Caribbean, but now in the southern United States and in Mexico. So all in all, as I stand before you, as a fellow shareholder, I am enthused by the recovery of the business. I feel confident that the business is resilient, as demonstrated by our performance for 2020 and the recovery so far. And we are very, very optimistic. Or as our chairman would say, we are cautiously optimistic as we look into the remainder of 2021 and into 2022, that we are focused in the right areas. We are focused on safety. We are focused on asset integrity. We are focused on looking after our people. And we are focused on growing our business. And all of these are happening concurrently by the employees who you've entrusted to look after this business on your behalf. And I feel very, very, very confident that when next we speak, you will see the continued progression of this business. And I would say the transformation of the business that is occurring over a period of time. So with that, shareholders, I want to thank you for your time. I want to encourage each of you to remain safe